All right. Back in the action once again. It's about that time of day again here, folks. It is that time to get back to work here. It's Tuesday evening. It is December the 3rd, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. Tonight, my job is to help you to find the best levels of support and resistance for tomorrow, the best entry and exit setups for tomorrow, and most importantly, how can I forget, my job tonight is to help you guys and gals avoid all those important traps for tomorrow. That's Wednesday's trading session, and we have a lot to cover in tonight's video. We'll grab the calendar. We got a bunch of news coming tomorrow, some big news right in the middle of the session. We'll grab the calendar for tomorrow, and of course, we'll grab some charts. We got some oil, some S&P, some Nasdaq, and of course, some gold on the radar for tonight's video newsletter. I'm going to jump in here first to crude oil, the black gold, the Texas tea, because oil, we called that range last night on the newsletter. It's bouncing around inside of that range right now, and that makes our plan pretty easy here for tomorrow. Let's grab that oil chart and let's kick this video into high gear here tonight. It is always great to be here with you guys and gals every evening on this video newsletter. What do we know about oil right now? We know oil is one big range, right? And range-bound markets, what do they tell us? Buy low, sell high, avoid the middle, and focus on failures. Now, of course, we had that gorgeous, right, that nested failure that we talked about in last night's video, and now the market rallies back higher. And you'll notice it's got a really strong move here as we go into the end of today's trading session. Anytime we see a strong move in one direction, we always anticipate to get another leg in the same direction. And really, that is a big clue as we go into the overnight Asian session and to go into tomorrow, Wednesday's trading session. So we know we've got this range. The range tells me I want to buy low. The range tells me I want to sell high. And so I'm waiting to sell off these highs right now. But again, I've got this strong move up. And what I'd like to do is see these buyers try at least one more time so I can sell this sucker back down into that trading range. And then once we get down to those lows, I'm looking for a chance to be a buyer right back up into that range. Now, I'm going to break this down into a bunch of small details for you guys tonight on the video. But the plan is pretty simple. We're buying low. We're selling high. Tonight, we'll talk about the specific entry setups that I'm looking for here to sell off of that high, how we want to buy off of this low. Buying off the low tomorrow may not be as easy as you think. It all depends on how the market responds as we go back into that trading range. We're going to grab a look at that in a lot more detail tonight on the video. If you like trading oil like I do, make sure you stay tuned for more on the crude oil chart tonight. How about that S&P? Boy, 2 days in a row now, just getting clobbered, just getting crushed, right? We can definitely see the S&P took another big tumble in the pre-market, right? The European into just the beginning of the U.S. session here this morning. Then, of course, went sideways on us, right, for a good chunk of the morning. Now, it really all boils down to really one thing. Do we trust this as a reversal? And I'm going to give it away right now. I just simply don't trust this reversal going higher. There's a couple reasons why I don't trust it, and we'll talk about those reasons tonight on the video, but I don't trust this at all, right? I want to see a little more. I want to see a little more momentum for these bulls before I go trying to buy this. Now, easier said than done, right? We know we have a range. So we know a range-bound market tells me what? Tells me buy low. It tells me sell high. So I definitely want to be a seller up here, but I'll tell you, there's going to be a bit of support here. How do I sell? How do I sell a market that has everything pointing towards the upside right now? What's the best setup for me to look for tomorrow to short in a market that is moving higher, right? We get some rising support trend lines. I want to sell this right back down into that range. And there's one specific pattern that I always like to look for in scenarios like this. So I'm looking for one pattern. We'll break that down tonight on the video. And then obviously, if we keep going higher, I've got two patterns. I'm watching for a breakout. I hope we get the breakout. I hope we get one of those two patterns because I'd love to get a nice short covering rally for tomorrow. But as of right now, I think I speak for a lot of people out there right now. I don't trust this bullish reversal. It's not as easy as just selling it though, because we have a bunch of levels of support below us. So we'll talk about the key patterns to short this market tomorrow. And obviously, if we can catch that big bull rally, we'll talk about two patterns to trade it on the way higher. The Nasdaq as well, very similar to the S&P. We had that big move down on the Nasdaq here. I almost called the S&P. It's almost identical to the S&P. The one big difference, though, with this Nasdaq is the Nasdaq never got their measured move. The S&P did. But we'll go into more details on that tonight, though. The big question, again, is, right, after we run lower and we go into this trading range, the big question is, do we trust? Do we think this is official 1, 2, 3 reversal? And if we do I really think this is a good spot to be buying it? I don't think so. I just don't trust it. I don't think we've gone strong enough to the upside yet. I think multiple days of moving lower like this, I have a funny feeling by the end of the day tomorrow, we will have at least gone back down and retested those lows for a lot of different reasons. The problem I have right now, though, is I can easily see, I can draw trend lines up off this low. So we can easily see the market has tried to turn bullish. What's the best way to sell when I've got support levels in my way, when I'm really, I would imagine a lot of people are going to try to buy this dip and they're going to try to send this market higher. I don't trust it just yet. If it does go higher, I've got two patterns I'm watching for as we go higher. And if I want to sell this thing short, I've got one very specific setup, and we'll dig into that in more details tonight on this video. Over on the gold, the yellow metal tonight, the Eminis go down, the gold runs right back higher here. This is a pretty easy one. You can easily see we are bullish into a trading range environment. We talked about a lot of this last night on the newsletter. Range-bound markets always tell us to buy low, sell high, right? So I want to make sure I'm buying underneath the range. I want to be selling up above the range. And obviously, that bullish bias tells me that I can be a lot more aggressive being a buyer than I can be a seller. And so I have no problem both buying and selling this market tomorrow because of that range. But I'll tell you right now, I have to be a lot more conservative with my patterns to sell up in my sell zone, and I can be a lot more aggressive on my patterns here for the buy zone. There's one thing though that I want to point out, and that is I've got multiple, you'll notice, one, I've got two, and I've got three, right? There are actually three different buy zones on this chart right now. Now, last night we talked about a lot of this, but there's one new wrinkle on this gold chart, and it has a lot to do with which battle zone that we use. Because if I use the first battle zone, it'll be a slightly different pattern than the second or third battle zones. And obviously, right, what if it collapses and runs back down? We'll talk about what a reversal looks like as well. So I've got to be very patient right now to wait for that pullback on the gold. How far will that pullback go? That's going to be a big piece of the puzzle for tomorrow. We'll also talk about if this party keeps going higher, where are we trying to go? Where is this market trying to go? There's not much to work with up there right now. I've got a couple levels overhead I'm watching for our next round of buyers, and obviously we'll talk about all those details tonight on the video. So gold is all set to go. I got the gold, the Nasdaq, the S&P, and how could we forget about that crude oil? Before we jump into the video tonight though, I just want to make sure to remind you guys to join our mailing list, because you may not be aware of this, but right before I publish this video, I send out an email to everybody on our mailing list. That way everybody on the list knows when our newsletter goes live every evening. I want to make sure you get that email. I want to make sure you are right there with me every evening so you're ready for the following day. Joining our mailing list is really, really easy. All I need is your first name, a real email address, and then hit that subscribe now button. Now, don't forget, when you subscribe to our mailing list, your job isn't over yet. You still have to go in and check your email inbox because I'm going to send you a welcome email. And inside that welcome email has a bunch of great free resources for us to work together, but most importantly, a verification link. I need you to find that welcome email, click that verification link. That way I get approval to send you that email every evening when our nightly newsletter goes live. And don't forget, guys and gals, sometimes that welcome email gets stuck in your spam folder. So check your spam if you don't see it in your inbox, and feel free to call me here in the office if you have any trouble getting that welcome email. Also, don't forget, if you have any questions here tonight on the video, if you have any questions for me here this evening, post those questions in the comment section below. Maybe you've got questions about patterns or charting or data or whatever questions you may have along the way. That's what the comment section is for. So drop those questions in the comment section below. I'm always hanging out down there to make sure I get all the questions answered. And while you're down there, do me a favor. Hit that thumbs up button for me, will ya? If you tune in every evening, if you love this newsletter, if this newsletter is a valuable part of your daily routine, I would love it if you help me support this channel by hitting that thumbs up button, because every time you hit that thumbs up button, YouTube helps to expose this video to other traders who would love to learn this strategy as well. So once again, guys, dump those questions in right in the comment section below. I'll get them answered here as soon as they're posted, and hit that thumbs up button for me. I always appreciate you guys supporting this channel. And please don't forget, like I mentioned earlier, if you have any trouble along the way, please don't be shy. Pick up that phone and call me here in the office. My wife Megan and I are always here to help. So don't be shy, right? It's very easy to get in touch with us here in the office. I promise we won't waste your time with some call center or phone tree, right, or automated system. We're a small family-run business here in Los Angeles. You call that toll-free phone number, we'll pick up the phone, answer all your questions. That way you can get the information you need in a short amount of time and get back to making money out there. So call me if you guys have any questions. Hit that thumbs up button and drop those comments in the comment section below. Let's get this party started here tonight. Tomorrow, of course, is Wednesday. It is a Wednesday hump day, right, tomorrow morning in our trade room. Now, as I mentioned in last night's newsletter, the next couple weeks are all about scarcity, urgency, volatility, right? Traders have one job as we go into the end of the year. What's that one job we talked about from last night's newsletter? To beat the index, right? That's the only job that traders have, right? If you work for a major money manager, your only job in the next 2 weeks, 2.5 weeks, is to beat the S&P 500. And for most people, if you don't get that done, you're going to lose your assets under management. So traders are in a very urgent scenario here these next couple of weeks. And you're going to feel that in the financial markets. So we are expecting to see increased volatility over the next couple of weeks. Now, as we go into tomorrow's trading session, we talked about this last night. Got a lot of important news tomorrow morning. We kick off tomorrow's trading session with at 8:15, the ADP, the tongue twister there, the ADP employment report. That is at 8:15 Eastern time. Now, this report is always a bit hit or miss. Sometimes it moves the markets, other times it doesn't. This will be used as a leading report ahead of Friday's big news of the week, that employment number on Friday morning. Tomorrow, though, we know that number on Friday morning will be important. But tomorrow, how big of an impact will that ADP employment report have in the markets? It's tough to tell. Sometimes it hits, sometimes it doesn't. Either way, I'll be watching closely tomorrow to see what the response is to that news at 8:15. But the big news tomorrow is that ISM non-manufacturing index index at 10 o'clock Eastern time. Like I mentioned before, anytime you see the letters ISM, right? Any of these ISM reports are almost always going to be big market moving events, especially for markets like gold and currencies. So tomorrow morning at 10 o'clock Eastern time, we get what really will probably be the most broad-reaching news report of the morning tomorrow. I will definitely make sure I am front and center at my desk tomorrow morning at 10 o'clock to make sure I'm ready for the reaction. Again, we're not trading the news. I want to make that very, very clear. I'm not trying to place my bet on what the news does. I wait for the news to come out by 10:03, 10:04, 10:05. I see how the market reacts to that news. I apply my strategy, update my charts as necessary, and find my setups, right? We're not trading the news, but we do know these big news events are going to be catalysts. And with that catalyst, markets get out of balance, markets start moving, and there's money to make during those moves. We're not trading the news, we're trading the reaction to the news. And then we have what really is kind of the buzzkill for tomorrow morning. I'm not going to lie, I'm not a very big fan of this weekly petroleum status report. This only applies to crude oil traders, by the way, right? The S&P, the Nasdaq, the gold, nothing else will be affected by this. It's just for oil traders. But I love trading oil. And my cutoff on Wednesdays is typically around 10:15, 10:10, 10:15 as we go into that petroleum status report. The way it usually works is the oil market, again, only oil, it usually slows down pretty good after 10 a.m. and then we'll get back at it after about 10:45 a.m., right? So it's about 15 minutes after that news comes out. Again, I'm not here to trade the news. I'm here to trade the reaction to the news. But in most situations, I'm being very honest, in most situations, after 10 o'clock for crude oil, things become really sluggish and sloppy and not really very good personality. Maybe tomorrow will be different because we have that ISM number at 10 o'clock. So tomorrow we might get a little bit more out of it, but typically on oil, it's after 10 o'clock. You really got to have some good momentum, some good personality to be trading close to that 10:30 news report. Then we got, of course, 10:30 comes out. We give it a few minutes. Usually it's about 10:40, 10:45 when the dust finally settles and we can get back to business, right? Looking for trades from there. So tomorrow morning, 3 big news reports tomorrow. The ADP employment report is kind of a coin toss right now. We don't quite know how much that will impact us for tomorrow. The big news tomorrow is that 10 o'clock ISM. And then again, hopefully that 10 o'clock news doesn't completely get snuffed out by this petroleum status report. But typically the news will slow things down for crude oil ahead of that number at 10:30. And then we'll pick up where we left off at 10:45 Eastern time for tomorrow. Now, don't forget, tonight we're going to put the plan together and we'll be in our trade room tomorrow morning at 8 o'clock Eastern time with all of our advanced members. I want to see you there, right there with me. In the meantime, let's get some charts all prepped up for tomorrow as well. I get the charts all ready to go. We get some oil, S&P, Nasdaq, and of course the gold market. I'm going to start off tonight here on the black gold, the Texas T, the crude oil futures. And as you can see, the market, again, like I mentioned in the introduction, it's a range, right? It's one big range. And really the most important pieces of a range, once we know where the actual range itself is, we mark our buy zones underneath, we mark our sell zones overhead. You'll notice I've also got a trend line I'm drawing overhead. I love expanding triangles on range-bound markets, right? You'll notice how I've got those trend lines, right, running back and forth. And these are usually where you're going to get the best turns, right? This is usually where you're going to get the best turns. So you'll notice we're right up around the high. I'd like to short this thing back down to the low and then buy it right back up again. That's the kind of the basic fundamentals. Last night we talked about the pendulum swing. The amount of the move underneath the trading range is oftentimes equal to the amount of the move above or on the opposite side of the range. You can see how if that's a coincidence, I I'd be very surprised if that's a coincidence, right? We see this happen all the time where the amount of the move below the range ends up being the target. As the price goes back up, that's where everybody takes their profit off. And that's usually where you're going to get the best exit, right, on a range-bound market. So again, we talked about most of this last night on the newsletter. I want to buy low, I want to sell high, and I want to avoid the middle of this range. So really the most important thing right now is, how do I sell going back into that range? I know I want to be a seller. I would normally look for a typical buyer failure pattern, but you'll notice we're not in a really great spot here to be trading. We're too close to the middle of that trading range. And then you look left, and the first thing you notice is that real strong, as I have it marked up here, that very strong move going higher. Anytime we see a strong move like this in one direction, we know the odds are pretty good. They're going to double that move up before they make that run back down again. And that's exactly what I'm looking for to be a seller into tomorrow's trading session. You can also see I've got some small little measured moves I'm drawing on here, right? And these are all lined up around that 71 area. So I really like that area up here. Again, I want to sell high. But the problem is if I try to sell here now, I'm way too close to that trading range. I don't want to trade inside the range. What I want to do is get outside the range, right? And then sell it back down again. Again, I've got this trend line over here, right? We've got this trend line over here. So really, it all comes down to, at least in my opinion, I'd like to get this thing to go up into that range. And then as it's pulling back to the moving average, I'm going to look for buyers to try to buy that pullback and try to be a seller right into those stops and back down in, right? What we'll basically look for a nested failure pattern to sell back down in. So again, I'm anticipating another leg higher, anticipating another leg higher. As we go back up into the pendulum swing, as we go back up into our area of resistance, I now anticipate that moving average coming over. At that point now we have the buyers completing their objective. Their objective is to retest that high. And at that point, once they do get back to those highs, now I can wait for that buyer failure. I can look for a buyer failure pattern, and then maybe we get lucky with a pullback before we get back down into that trading range. So again, imagine now we go up in Asia, right? We go up in Asia, we pull back now to the moving average. The buyers now come in, they try to buy that pullback. Horrible spot to be buying a pullback, right up around the pendulum swing, right up around that trend line, right up around that measured move. At this point now, I know exactly where those buyers have their stops. And where there's stops, there is what? There's pain. And that's the most important thing you want to think about right now. It's a range-bound market. Range-bound markets tell us to buy low, sell high, and I'm trying to sell high. The easiest way to sell high is to simply wait for the buyers who don't know any better in this situation, right? They're not paying attention to this as a range. All they see is buyers going higher. All they see right now is higher highs and higher lows. They're not seeing this as a range because for whatever reason. And so whoever's buying that pullback right now, I know exactly where their stops are, and I want to sell right into those stops. Because as soon as they get stopped out, they'll become a seller. And then if we get lucky, we can look for that pullback pattern. Now that pullback pattern won't always show up because sometimes it just collapses back down into that range, right? You wouldn't want to take the pullback if that was inside the range. So for example, right, sometimes it just collapses back down and then the pullback comes over from there, right? Yeah, see, I don't want to take that one. That pullback's not going to be very effective because it's too close to the range. Failure into pullback and then back down into that range, right? Buyer failure into pullback pattern as we go back into that range. Now, what if we don't get that move higher? Right? What if we don't get that move higher? What if at this point now, this market runs back down into that trading range? At this point, we're looking for traps because now this becomes a crown reversal pattern, right? We've talked about this a lot last night. If we run back down into that range now this sets up as a crown reversal. right? So if we do end up back into the range, I don't want to chase after it. I want to sell high. One of my favorite patterns to sell above the top of a range is called a crown reversal pattern. It's pretty simple. We see one try for the buyers, lower low, two try for the buyers, trap high, and we're selling it back down in. So that's another pattern I'm watching here to sell off of that high. Now, what if we drop back into the range though? There's two scenarios I want you to think about. One scenario is if we go back into the range and we sit for a while. If we go back into the range and we sit, what that will do is that will absorb a lot of the bearish momentum. So now all I need as we go lower is to get a typical failure pattern, right? A failure pattern off the moving average, and we'll try to buy it back up. Now, there's also something I want to keep in mind too, and that is what if it just dumps and runs, right? Like we saw in last night's newsletter. See, in this situation, in this example, now that momentum is very strong. I can't just buy into a failure. At this point now, we're going to let them try once, let them try twice, and buy it from there. Just like we talked about in last night's newsletter for that matter. We had the strong move down. See how the bears tried once, they tried a second time, and then, right, they finally took it back higher. That's exactly the type of setup we're looking for tomorrow morning. So again, keep it in mind, right? If we sit down inside that range for a while, then we make our move. Okay, now I can look for those bears coming in, trying to sell off that moving average, and I can buy right into those stop losses, buy that pullback as we go back up into that range, right? Failure into pullback combination. But if we just tumble, you know, again, I mentioned that trend line down here, right? That trend line's a really great spot. If we just tumble, well, at that point now, that momentum is far too strong. I want to see him try once. I want to see him try twice. And once I've got those sellers now trying once and trying twice, now I can look for the correct entry signal, right, and back up into that, right, into that range. Remember, the key is you want to be buying inside the buy zone, right? You don't want to be buying this way up here. Right? We saw an example of that earlier this morning, right? Where you were tempted there to buy up inside that range. You want to buy down in that buy zone, right? So make sure you're waiting for that area to buy underneath that range, not inside the range itself. Now, what's a breakout look like? Because now we've talked about all the details, right? Now we know to sell off the high, right? We know if it runs back in, trap high. We know to watch out for the stall and then the failure back in, or if it just dumps, right, a nested failure and back up from there. What if it breaks out? What if it breaks out? What's a breakout look like? I have one pattern I'm looking for here tomorrow, and then it's what we call the the 1, 2, 3 breakout pattern, right? The 1, 2, 3 breakout looks like this. Strong move up, pull back to the moving average, strong move off the moving average. Simple as that. I call it a 1, 2, 3 breakout because it has 1, 2, 3 legs for the breakout. Now you might notice, right, I'm not just simply buying that first pullback, right? If every time we had a strong move, if it was as simple as buying a pullback in a range, we'd all be rich. You wouldn't be sticking around to watch this video. You wouldn't need my help, right? It's not enough just to get a strong move down. You've got to hold that pullback and keep it going. It's not enough just to get a strong move up. You've got to hold that pullback and keep going. So for me to want to be a buyer on a breakout, I've got to see some strength here. And not just some strength, hold that strength. So strong move up, that'll be a good start. Look for that pullback to the moving average. Wait for that jump off the moving average. Now I can go buy this breakout. Now mark up that high. Mark up that new trend line. Find your hidden channel. And I'll tell you, this is a remarkably reliable pattern in really all shapes and sizes. When you get a 1, 2, 3 breakout or a 1, 2, 3 reversal pattern like this, I'll tell you, it almost always pulls back to that hidden channel. It's one of my favorite setups in all types of market conditions, not just in range bound markets. Now, the same thing applies as we go lower. The only difference is as we go lower, I've got to see that 1, 2, 3 breakout down here, right? Down towards the edges of this trading range, right? We oftentimes sometimes see the market tumble down here, right? I can't use that strength as a reason to sell that. But if they can hold that and run, okay, now I'm in. Let's make that, right? Let's mark up that low. In that case, I would find that hidden channel, right? And sell off the top of that hidden channel. Right? Now, we'll talk a lot more about finding the right hidden channels tomorrow morning in our trade room. What I'd like to do, though, is give you a lot more details on all of these setups, because I want to make sure you can kind of see examples of these so we can get the most of our time together every evening on this newsletter. So here's what I want to do. I'm going to put a link in the upper right-hand corner for our free trading classes here at School of Trade, right? Don't let the name free fool you. It is jam-packed with lots of great information. Really, I want to give you a deeper dive into the entire trading strategy that we use in our trade room, all my favorite entry setups. You'll see hundreds of examples of how we apply those setups, things like failure patterns and nested patterns and crown reversals and 1, 2, 3 breakouts. You'll see hundreds of different examples of those on our favorite futures markets. Grab that link in the upper right-hand corner and get registered for our free trading classes. If you're on the blog right now, I'll also put a big red button for you to register right below the video tonight on the trading blog. So if you're on the blog here at Sideways Markets, just scroll right down. There's a big red button there. If you're on YouTube right now, check out the description of the YouTube video for all the links I mentioned in tonight's video. Now, where's our targets here right now? Where are the sellers trying to go? The sellers are trying to get back down to retest that 55. How about the buyers? Yeah, the buyers, they want to go all the way back up to that 58. So buyers have a hell of an opportunity here. If they can grab that 1, 2, 3 reversal, we can mark up that hidden channel, buy off that low, and try to ride that sucker as we go higher, right? So that's definitely something that we're looking forward to tomorrow. Or do we get that run up, that failure, and that collapse back down into that trading range? Only time will tell, and tomorrow morning, we're going to do it together every morning like we always do, right, in our trade room. Grab that free course. In the meantime, let's get some S&P going here, shall we? As I mentioned in the introduction here, second day in a row now, we get this big, strong run down into pretty much a trading range environment. Now, we know from last night's newsletter that when we have a range, we buy low and we sell high. We know when we have a big bear move into a range, this becomes a bearish bias, right? It's a bear market into a trading range. So knowing that we're bearish, I know that I want to be a seller up above the top of that range. I can also be a buyer, but I have to be a lot more careful if I want to be a buyer in a bear market, right? We talked about this last night with those nested failure patterns. And again, you'll learn a lot more about these failure patterns in that free trading course that I mentioned above. So we know the market is overall bearish. There is definitely no doubt about how strong these bears have been recently. And we know we can see that range down here, right? So we take that trading range. Let's zoom in here again. We take that trading range. We then create our sell zones above. We create our buy zones down below. Right? I want to buy in the buy zones. You get it, right? I want to sell in the sell zones. My favorite patterns in range-bound markets are failure patterns. Okay, whenever I see a range, I always know I want to buy low, sell high, and focus on failures. Now, there's one kind of curveball on this chart right now, and that is how bullish this market pretty much has been since about 9:45 this morning. And while I'm sure a lot of people are looking at this as possibly a big short covering rally all the way back where we came from, we're just not there yet. We're not there yet. I think this rally higher is nothing more than a response to 2 days in a row of big moves down before really any of us got to our desks in the U.S. session, right? Most of this move had happened before 7 o'clock, 7:30 this morning. So most of us weren't even sipping on our coffee right before this thing tumbled. So I'm sure a lot of U.S. traders missed a good chunk of the move lower. And I can imagine that once they're hanging out down here, they're like, this is ridiculous. I'm not going to sell this low. So sellers backed away. And as they back away, the market starts to peel back. I would look at this almost like a flag rather than a range, right? Get that big move down. It looks more like a flag pattern than it does a range. There is a range on there, and I think the range is the most important thing, right? But it looks like a flag. That's kind of what it feels like right now. You get that big move down. Nobody wants to sell that low. So what do, right? They mark up some, 38.2, 50%, 61, right? They mark up some levels and they put their sell orders up here, right? And they just wait for it to come back, right? A lot of traders do that. They'll see that big move down. They're not going to chase after it, and they'll wait for this to come up and they'll sell it back down again. Well, we are pretty much right there right now. That's why I don't trust this market. I'm not going to lie. You can definitely see, right? It's a 1, 2, 3 reversal, and you can easily tell, right? You can draw a trend line right there. You've got your channel. There's no doubt about it, right? We got some support here. The big question, though, is, do I really think these buyers have it? I don't think they do. I think this whole move higher was probably just kind of a sympathy rally or a rejection rally based on the fact that we're 2 days in a row of this market just getting clobbered and going lower. People are trying to find some higher price to be a seller. Now, prove me wrong, right? Prove me wrong. Hold this pullback and run. If you can push through this area here, this 91 area, by the way, I marked up this purple line. That purple line is the low from before, right? So prove me wrong. Prove me wrong. Prove it to us. This is not just a pullback and a run lower here, because that's what it sure looks like right now, right? It sure looks like we're pulling back right at that 91, 92 area, and we should see one more level, right? One more leg going lower. Not to mention, we get all that bearishness. And whenever you see that much strength in one direction, the odds are pretty good. We're going to end up right back down there at some point here, maybe tomorrow, right? But some point this week. Now, again, this whole move down was based on some headline news regarding the trade deals, tariffs back and forth, blah, 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 blah. I don't care about the why. So, keep in mind, they could pull the string on this. If the U.S. President Trump tweets out something tonight, says, I was just joking around, no tariffs, right? This thing will probably go right back up where it came from. That is unfortunately the world we live in right now, where that could easily happen, just like the market tanked, right, just after the opening bell. There's no way to really know that's going to come ahead of time, right? However, we do know that we do have that big bear move down. We do know that the sellers will probably try to retest that low. We also know that buyers are likely going to try to buy, right, on this next pullback. Or the market may try go sideways here, and we may see buyers trying to nibble down here, right, and buy it as it pulls back. I don't trust them at all. I can't justify buying this market right now. What I'll have to do, though, is I have to respect the buyers, and what I'll look for is I'll basically look for these buyers to get themselves in trouble. And there's really two patterns I'm watching for here to be a seller here tomorrow. Again, you understand the idea of the range. We're up inside this sell zone here. I want to sell back down. But again, I've got some support in my way. Here are two patterns I'm watching for here tomorrow. One of them is a crown reversal. The other is a two-try trap. The first one is the one I hope we get. I want to see us pull back. I want to see one try for the buyers, two try for the buyers, right? And then back down we go from there. Okay, that will be that same crown reversal pattern that we talked about on the oil, right? It's almost identical we saw on the oil, or what we just talked about on the oil. Again, I'm anticipating that buyers will come in. I'm anticipating buyers will try once. I'm anticipating you'll definitely see some buyers off the low of that channel. And I'm also anticipating that those buyers are the weak hands, not the strong hands in the market right now. And I'm anticipating those buyers are going to have their stops nice and tight. And once we see a little trap high up there, I'm anticipating the sellers are going to roar back into this market and really shove this thing right down their throats, back into that range. And they're going to try to hold that runner all the way back down to that low. So our targets are back into the range. And again, back down to retest the low. Again, notice how I draw this. I want to see lower lows in price. Buyers try once, buyers try twice, trap high, selling it back down. Again, I call that a crown reversal. Now, a very similar pattern to this would be, maybe I'm wrong, right? Maybe there is no buyers here. Maybe this thing just runs back into the range, right? If it does run, goes back into the range, look for the underbelly of this channel combined with a similar pattern. I don't call this a crown reversal. It's already reversed. I'm going to call this a two-try trap. But I'll tell you right now, this is where the magic will be tomorrow if we can get this thing to run lower. And what you want to do is, again, you want to let those buyers try once, buyers try twice, lower lows on this. Again, lower lows. Very, very important you get lower lows because buyers want to buy low. Right? That's the way I remember it. Buyers want to buy low, lower lows on those two tries. Sellers want to sell high, right? You could even say right now, this is a very similar pattern. We go up, there's one try for the bears, there's two try for the bears. You can already see this of course will be very aggressive, but you can already see, right? There is the same pattern now on the flip side. Right? Now, again, I'm going to try to fade that. I'm going to try to trade the failure of that pattern, right? But if you want to be an aggressive buyer, that's what you're looking for. A trap low below 88 and a quarter off the low of this channel. Not a bad pattern, right? I just don't trust these buyers just yet. I think this rally higher is all based on rejection off that low. So again, two sell patterns here. One is that crown reversal, right? Before we actually reverse. The second one is that strong move down, one try for the bulls, lower low, two try for the bulls, trap high, and if we can get this thing off of that trend line, off of the underbelly of that channel, I'll be a very happy camper here tomorrow. Now, what if we just dump back into that range? If we just drop back into the range and go sideways now, that will give you a bear momentum now. So now, anything that pokes its head higher, we're looking for buyer failure, sell back down. So that's the easy one. Okay, if it just dumps back into that range and starts going sideways now that's a very bear bias now. Now again, we want to get above the range, right? We don't want to trade inside the range, above the range, wait for those buyers to try to buy the pullback and sell it right back down into the range. If we collapse and run all the way back down, right? All the way back down. If this thing just takes off the downside, right? I will gladly look for that two-try trap if it really is that strong. But you're going to have to get that before you get back down to those lows. Okay, this one's all about personality. It'll have to be a very strong, I'm talking very, very strong move down. You'll have to get those buyers to try once, try twice, because you don't want to sell low, right? You know where they're trying to go. You want to sell that trap. That would be the most aggressive way to be a seller on that market right now. That'd be a very aggressive way to do it. And again, that would come from a very strong bear move down. But what I'm talking about though is what if we drop as we go? Can I buy this thing back up? I can, but I have to use another one of those reversal patterns because that momentum is way too strong. And I'll look for another one of those crown reversals. 1, 2, and trap back up. So as you can see, I use the same patterns quite a bit. I just use them in different situations differently, right? This, of course, again, if we just tumble, that momentum is so strong. I want to buy low. It's a range, but I don't want to buy, right? I don't want to buy just because I'm at support. I want to make sure I respect those bears, let them try once, let them try twice, higher highs, because sellers want to sell high. Wait for that trap low, and we're good to go from there. Now, what's a breakout look like, right? A breakout would be obviously if we make a run lower, right? Make a run lower, we hold that pullback and run. If we hold it and keep going, good. Find that new channel, and we're selling off the high of that channel. Okay, the real test though will be, can we break the highs here, right? That'll be the real test, right? 1, 2, 3 breakout. Now again, I know I've got some resistance overhead here. So I want to see that 1, 2, 3 breakout, mark up that high, mark up that low of that hidden channel, and we're buying the low of that hidden channel. The target on this is all the way up to yesterday's low, right? Basically where we were 24 hours ago. Okay, now, could we also go 2-try breakout? We could. Strong move up, 1 try, 2 try, trap low and go. That will be another option. Just make sure you get a very strong move higher. All right, we're not there yet, right? I don't want you taking this pattern up here, right? 1, 2, that's not going to be enough, right? You want to see it really blast. 1 try for the bears, 2 try for the bears, trap low, and you look for the go off the signal candle, right off that trap low. And again, I call that a 2-try breakout pattern compared to a 1, 2, 3 breakout pattern. The 1, 2, 3 breakouts are a lot more reliable, right? They're also not as dependent on that pop, right? You just want to make sure you hold that pullback and make that jump off the moving average. And again, I talk about all of these patterns inside that free trading course. So make sure you get registered. Use all the links in the description of the YouTube video or grab that big red button for me below the video tonight on the trading blog. How about some S&P? Okay, so S&P is looking pretty good, right? We got that plan all put together. The key is going to be as it goes lower here, right? Does it sit inside that range? Or does it just tank? Because that's going to be a really important part of this because of momentum. All right, we'll talk more about that on the Nasdaq. Nasdaq is in a very, very similar scenario. We had that big move down overnight. It then goes into a range. Range-bound market tells me buy low, sell high, avoid the middle. Range-bound market says, do we have any momentum? We do. Lots of bearish momentum. Anytime we see a strong move in one direction, we know the odds are very good. We're going to end up back at that low at some point. I thought for sure it'd be today. It'll probably be tomorrow. If not tomorrow, maybe on Thursday. We don't know enough about it yet. Let's talk about this though. So we know the sellers, they want to get back down to retest that low. But we also know we've got a pretty good 1, 2, 3 reversal. Now, I almost do the trend line up like this, right? Find my channel, and you could draw it like that as well. It really doesn't matter to me how you draw this channel because I think the pattern is going to be the most important piece of this. We know that trading range is going to act like a magnet to draw that price back down into that 8,200 no trade zone. We also know the market's now gone 1, 2, and 3 legs up, and it's looking right into that area of resistance here overhead as well. So the market is definitely leaning towards the bull side right now on the Nasdaq. But again, I don't think this is a bull reversal. I think this is just a flag pattern, right? It's a strong move down. This is your channel, and we're just simply pulling back to allow sellers to get short at a higher price. You know, right? This is probably what, halfway back, something like that. I'm not a big Fibonacci guy myself, right? But you can definitely see, right? We're about halfway back there. So, you know, this, in my opinion, would be a good spot for a lot of those sellers to start to look for, right, their shorts. Now, again, I want to be a seller, but now I've got a problem with momentum. Momentum is too bullish here to be a seller right now. This is why range-bound markets aren't as easy as just buy low, sell high. It's a lot of it has to do with momentum. So knowing that the bulls have momentum, but knowing that the odds are pretty good that we'll eventually end up back in that range and back down to that low, this is where I start to look for that opportunity now to catch the buyers once, twice, and trap high. This is a very conservative entry pattern short, and I have to be relatively conservative on this. I know I want to be a seller back into the range, but I've got too much bullish momentum as we're going higher here right now. I just can't short this thing right now, right? You just can't short into a big move up like this, right? You'll end up losing money that way. Sometimes you'll get lucky, right? But you'll usually lose money that way. Again, you want to wait for the 1, wait for the 2, and then get that trap. Right? And again, lower lows in price because buyers want to buy low, right? Buyers want to buy low. Another pattern I'm watching for here tomorrow, right? That was the crown reversal. Another one here for tomorrow is going to be that 2-try breakout or that 2-try trap, I should say, right? Strong move down. Again, this is where strength really comes in handy here. Strong move down, real strong move down. Now the gig is up. Right? If they get a strong move down, the gig is up. Everybody knows this thing's going back into that range. Now it's all about getting in. Buyers try once, buyers try twice, trap, and in from there, right? So if we do get that strong move down, right, moving average will come over there, get those buyers to try once, lower low, try twice. And again, these are the same patterns we talked about for the S&P 500. Okay, this one doesn't look like it'll be as easy to get underneath that range, but let's say we do, right? Or under the channel, right? That channel low right there. If we do make that run lower, 1, 2, trap, I mean, that would be ideal. The only problem with that type of setup is, look how close you are inside that range. That one will be tricky. We'll have to really be careful that that signal candle doesn't put us too far into that range. Because when you're trading inside of ranges, you usually get kicked back. Right? Oftentimes, it'll get kicked back against you. So again, crown reversal is the first one. 1 try for the bulls, 2 try for the bulls, right? A failure times 2, basically, right? It's a crown reversal. Buyers try once, buyers try twice. Strong move down, 1 try. Trap low, trap high, right? Get everybody all trapped up and back down into that trading range. These are very, very common patterns. You can see one happening right now. Strong move up, 1, 2, aggressive buy, right? It will be pretty aggressive, top of the channel, right into that measured move. That would be a 2-try breakout, right? Like we talked about earlier, this would be the same pattern. Bears try once, bears try twice. Again, this might be a little bit too aggressive for my liking. You might be, right? You might like that pattern for tomorrow, but be careful. I wouldn't use a full size. I wouldn't use a full size setup on that one. You're buying relatively high. There's not much space left for that measured move. Now, one thing you do want to be aware of here is we may end up seeing this thing go sideways. So this will also apply to the S&P. As the market runs higher, it may end up sitting here, right, and going sideways here. Now, if the market sits and goes sideways, this is where things become more difficult. And what you want to look for is really it's the same basic pattern. It's just got to stay more patient for it, right? I want to see us go 1, 2, trap, and go back into the range. Or what we'll probably end up getting, if the market goes sideways, it'll probably make a run, 1, 2, trap, and go from there. So as you can see, it's the same basic pattern. And the reason why I have to use that pattern is because I'm trying to sell when I have a lot of bullish momentum, right? That's the reason why this pattern I keep mentioning over and over again. It's a real reliable way to sell in an overall bull market. Again, the range says to sell, but momentum says, right, be careful of those buyers. Now, again, if we end up dumping back into that range right now, right? Do we go sideways inside the range? That puts us now in a bearish bias. Moving average comes over. Get up above the range. Wait for those buyers to buy the pullback and sell right into those stop losses, right? Or do we tumble back into the range, sit for a while, make another run lower? Now that momentum is not going to be an issue anymore. So if we go sideways here, right, then we make a run going lower. Now that moving average comes over. I'll wait for those bears to try to sell off of it, look for that failure into pullback combination, and look to buy back up into that trading range. The big difference, though, is if it tumbles, right? If it really runs lower, now you want to use that nested pattern that we talked about in last night's newsletter. 1 try, 2 try. If you can get it, a trap low would be a crown reversal. That would be even better. And again, I hope you can see the difference of why I use different patterns, all about momentum. And when you come slicing through that range, it's all about, do we stall out inside the range? Momentum calms down, or do we just run through the range? And momentum is a big concern at that point. What's a breakout higher look like? A breakout higher, pretty simple at this point. It's a 1, 2, 3 breakout. Mark up that high, mark up that low. We're buying the low of that new hidden channel. That's a very easy pattern to find. It just takes some patience to wait for it. A lot of people get in trouble because they try to buy that first pullback, and that first pullback is just simply not reliable enough, not in this type of market that is 2 legs down over the past 2 trading days. Or if we see a real strong break higher, one try for the bears, two try for the bears, right? Same basic pattern here. I call this a two-try breakout in this situation, right? It's a strong move up. Bears try once, bears try twice, and that trap underneath that low. Where's my targets here right now? My target for the buy side is up at that 83.40 area. Our target for the sell side is back down to retest that low. We've covered a lot of the bases here tonight on the S&P and now on the Nasdaq. Really, the kind of the biggest thing we're worried about right now is waiting to see how this market pulls back. Do we get that crown reversal to sell back down? Does it just tank and run back in? In that case, I get that trap high and sell there, right? Or do we stabilize and go sideways? If we do go sideways here, I'm still looking to go back into that trading range. I'll still look for that same basic pattern there to keep fading that move back down into it. I just have to be careful because of that bull momentum. And maybe the bulls finally get this rally to hold, right? Mark up that new hidden channel. Again, you'll notice how I draw that, right? I'm drawing off these highs. I'll bring it down to that low now, find that hidden channel, buying off the low of that hidden channel. The other option, of course, is that strong move up. One try for the bears, two try for the bears, that two try breakout pattern. That would also be an option as we go lower. And again, both of those patterns will also apply as we go lower. Just make sure you're not selling into that low at 81.60 because that's where they're trying to get to. And again, if you're on YouTube right now, make sure you grab that link in the upper right hand corner to get registered for our free trading classes. If you're not, you're on the blog right now, there's a big red button for you right below me tonight on the video to register as well. Let's wrap this thing up here now with the gold. The gold's a pretty easy one, right? They're not as difficult as the others here today. Gold is something new, right? Bit of a range here. Tongue-in-cheek, of course, right? I'm kidding, obviously. Something we're very familiar with, right? A range-bound market. This is a trading range. It's actually a triangle, right? And triangles are pretty great patterns. I think this is more of a range, though. You can see how they bounce here, they bounce there, they bounce there. I think that's going to be a range and not a triangle. And the difference is, just so you know, the difference is a triangle has an expiration date to it, right? If this was just going up, down, this would be a triangle, and there'd be an expiration to it, right? Triangles, once they get to the finishing point of that triangle, we oftentimes get a big, strong move in one direction. Okay, that strong move obviously will probably end up right back up into that range, or it could end up into a 1, 2, 3 breakout going higher. We don't quite know yet. This is not the case though. You'll notice right there, you'll notice how they go up, they go down, they go up, they go down, they go up. Yeah, that's a range right there. Right? That is not a triangle yet. It only becomes a triangle until later on, right, in the move, and then you start seeing that triangle. The moral of the story, though, is triangles are going to be a lot less common than rectangles. Once I have my rectangle, again, a triangle tells me there's an expiration date. Rectangles, there's no such thing, right? This thing could keep on going sideways all week if it wants to. Okay, once we have that trading range, though, then we know where our buy zones are below, and we know where our sell zones are above. Now, I talked earlier about momentum. You know, yesterday evening, we talked about how important it was for momentum. And we have all of that bullish momentum here right now, which basically tells me I can be a lot more aggressive at being a buyer. But there's one spot I've really got my eyes on right now, and that is that level right there at that 1476.7. If I recall, that level is also, nope, I'm mistaken it. Right, but that level is a reversal line. 76.7, right, is a really valuable level for us because that was the first move up, the pullback, and the go. Those almost always end up at some point coming back in and playing a role for us, right, at some point later on in the process. That 77 area is a big deal for us. So here's the way you got to work it, though. We know we're bullish. And I want to break this down. I've got this trading range. I've got one buy zone there. I've got one buy zone there. Okay. The reversal line, as I call it, I call these reversal lines. That reversal line at 76.7. Notice how it's not in the first, it's in the second range expansion area. Now, this is important because if we get a pullback into the first range expansion, momentum is still very much on the bull side, right? But if we pull back even further all the way down into that second expansion level to get that reversal line, now, yeah, I do want to go back into that range, but now that momentum is not nearly as strong anymore, is it? You see where I'm going with this? So basically, I want to be a buyer down here. I've got my eyes really on this area right there. But I'm wondering, do we get a relatively shallow pullback into range expansion number 1? If that's the case, I look for a straight up failure off the moving average into a pullback combination and a run back up into that range. It's a seller failure pattern, right? And imagine it, right? We run lower. The bears now think this thing's reversed. They try to sell the pullback to the moving average, right? Their stops are right above that high. It's not just their stops, right? It's the pain now that comes in there. They get forced out of their short positions. They become buyers, and the market snaps back up into that trading range. It's a range market. I want to buy low, and I can do that by using the failures, right, of those sellers. And again, sometimes we get lucky and we get that failure into a pullback. The only problem is a lot of times that pullback pattern will happen too close to the range. And by the time you get a good signal on it, you're back inside the range, and it's just not a good habit to get into to be trading, inside that trading range. But what if we really tumble here? If we really tumble, what you want to think about is two types of patterns here. One is going to be a two-legged pullback. In this case, we're going to draw that trend line and use that trend line as a level of support. Okay, we call these a two-legged pullback. So in these situations where we get a really potential deep pullback in a bull trend, if I get that, and again, I call this a two-legged pullback because of 1 and 2, I'm going to use that, right? We'll use that, again, it's called a two-legged pullback. I call it a 2LP. You want to go up and over. Now, the key to this pattern is you want to see some daylight in between the candlesticks and the trend line, right? Sometimes what happens is you'll get these pullbacks, 1 and 2. You'll draw your trend line over, and you want to stay away from these, right? The market will kind of grind its way down. Yeah, stay away from those ones. Those ones are really tough to tell which one is the buy signal. What you want is you want to go up, come back, and grab it. You know, like I said earlier, there should be some daylight. Well, happy little sun right there, right? Well, there should be some daylight in between the candlesticks and the trend line. That two-legged pullback is always on my radar whenever we have a really deep pullback out of a trading range. Right? That's one great option for tomorrow. Or if we dump, right, all the way back down again. At that point, the market's bearishness is too much just to buy into. So what do? We let them try once. We let them try twice. Sellers want to sell high. And then once we've got those bears trying twice, right, if we can get a trap low, even better. That becomes a crown reversal at that point, right? A nested failure does not have a trap low. A crown reversal does, right? We won't need a crown reversal because of the overall bullishness in the market, but it won't hurt. I'll tell you that much. Look for the proper signal candle. You're buying right into those stops. Now, as a heads up on this, a lot of times these deep pullbacks, they'll run up and you'll get one of those little two-try traps. So this is another add-on. As you can see, I love to use the two-try rule. You're going to learn a lot more about that in our free trading classes. But again, right, imagine now it's a nested failure pattern. The market then jumps back up. The bears try once. The bears try twice. Don't buy in the middle. Buy low, trap low, right? Those are 4 patterns to watch for here tomorrow, right? A straight up failure into pullback combination, a two-legged pullback off the high, mark the trend line up and over and in, or that nested into that 2-try trap, and make sure you avoid, buying into that trading range. Now, as we go sideways, stay out of the middle, stay out of that area. As we try to go higher here, how do I sell it? Very carefully, very carefully. No, crown reversal, Crown reversal. We go up. Buyers will try once. Buyers will try twice. You got it. Now we short it. Now, in this one, you do want that trap low. That trap high, You do need that trap because of why? Because you got to go against the trend here, You're going against that trend. Good example right here. Strong move up. Buyers try once. Buyers try twice. Trap high. This one's probably not the best example because you're right inside that range, I would prefer to go up inside that battle zone. Moving average comes over. Buyers try to buy the pullback once, lower low, They get that trap high. Again, buyers try once, buyers try twice. It's a range. We're not buying up here. You don't buy the high of the range. You buy the low of the range. We sell the high of a range. But it's bullish. How do you sell in a bull market? With a reversal pattern. My favorite reversal pattern, let those buyers exhaust themselves. 1 try, 2 try, and then short that sucker right back into those stops. What happens is you get these big signal candles, and all the buyers, they're going to bail on this thing, The buyers are not going to stick around to let that thing hit their stop loss. They're going to get the heck out of that trade and it'll collapse back down. But what if this thing jumps, We're bullish. So a 1, 2, 3 breakout wouldn't be a bad idea. Strong move up, Again, 1, 2, 3 breakout, pull back to the moving average, 1, strong move. 2, pull back to the moving average. 3, strong move off the moving average. That's your green light now. Mark that high, mark that low. We're buying the pullback off the low of that hidden channel. Or it's a very strong move up. 1 try, 2 try. This is when I remind you, this is called the FOMO breakout for a reason, You want to see, again, I've been calling it a 2-try breakout or a 2-try trap. Again, my nickname for this pattern is the FOMO breakout pattern. I'm not a big fan of chasing after markets, but if I can see a big move up like this, get those bears to sell once, sell twice, trap low. That's one of those patterns you have to take if it really, really rips higher. Now, where are we trying to go as it goes higher, The target going higher is pretty easy. It's at 1,500 overhead. The next level over above that is all the way up. Keep going, 1,522. So we've got quite the hill to climb here. 1,500 seems to be a pretty easy level. Or we make that run lower. 1, 2, 3, move lower, mark the low. Mark the high, sell off that high, and back down to retest that low we go. Or strong move down, 1 try for the bulls, 2 try for the bulls, trap high. Again, we call that what? The FOMO breakout, the 2-try breakout, 1 try for the buyers, 2 try for the buyers, trap high, so we're selling high. We're not selling low in that situation. You got to anticipate the buyers are going to try to go back into that range. Let them try once, let them try twice, and once they see that big red candle right there, those buyers are sitting ducks, and they're going to get run over as this market collapses back down to retest that low. This should be a very good day tomorrow. We get that big news tomorrow morning at 10 o'clock. Keep your eyes on gold tomorrow, gold and currencies around that 10 o'clock ISM. And don't forget, like I mentioned earlier, make sure you grab that free course, linked up in the upper right-hand corner. And above everything else, though, make sure you come out and join us every morning in our trade room. I've covered a lot in this video newsletter. If you're still watching right now, that tells me you are part of the very small people who finish what they're started. I want to work with people like you. If you're still watching this video right now, an hour into this lesson, that tells me you are part of the group that will make this happen. I want to work with people like you in my trade room. So get registered as a brand new advanced member. You can do that a couple different ways. If you're on YouTube right now, I'll put all the registration links in the YouTube video description. If you're on the blog at Sideways Markets, just scroll down. There's a big blue button right below me tonight on the blog at Sideways Markets. Or if you're on the website at schooloftrade.com, you want the advanced course. The advanced course includes all of our video classes, every single trading session with me in the trade room, all the ongoing support, all the tools, all the indicators. There's a video there to go over all the details. If you have any questions, use that live support tool. Call that toll-free phone number. I'm always standing by to help you guys out. But on that note, I will let you guys go for tonight. I've finished up with this, right? I think we're about due for a break here at this point now. So rest up, get registered for tomorrow morning's trading session. I want to see you there with me, especially if you're watching here still with me tonight. You are definitely somebody I want to work with as a dedicated client. So get registered. I'll see you guys and gals tomorrow morning. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.